Working capital, technically it's taking all of your current assets minus your current liabilities. It's like, and included in all those current assets are things like cash, your inventory, accounts receivable, all those things starting from cash, and then inventory, accounts receivable, those things that will be converting to cash in the near future, minus all those things like your accounts payable, obligations that you have to pay, cash going out. And the net difference from those current assets minus those current liabilities, that's an indication of the term we call your working capital. Working capital in its most basic form is cash, and how cash works for you in a business. For instance, you take your cash and you want to run a business, you're going to sell a widget. So you take that cash, you buy raw materials. So you've taken your cash and you've now converted to raw materials. Raw materials is also a form of your working capital. It's just cash in another form. Now you take that raw material, you fashion it into inventory. Inventory is now another component of working capital, okay? Then you take that inventory and you sell it to your customer. Once you sell it to your customer, sometimes they say, well, we'll pay you in 30 days. So you then accept what's called an account receivable. An account receivable is another form of working capital. Eventually that customer pays you for that on that account receivable, and then you collect it in cash. And working capital is just all these various components from cash, raw materials, inventory, accounts receivable. It's aggregating all of these concepts into this notion of all of these things working together are your working capital. How you're taking cash in all of its different forms and how it works for you in a business. How can I as an employee impact working capital? I don't think there's an infinite number of ways that you can affect working capital. If you're responsible, say we start with cash. If you're responsible for acquiring those raw materials, when you negotiate those raw materials, if you can negotiate a lower price, you're going to conserve cash. When you are negotiating those with your vendor, if you can negotiate terms where we pay them slower than we would normally, you are impacting cash. If you're responsible for negotiating with our customers, if you're negotiating with those customers and you're negotiating terms, if we can get them to pay us sooner rather than later, you will be impacting cash. And you take any business, whether it's you're involved in the manufacturing or negotiating, acquiring raw materials, or in the process of manufacturing those products, or you're in the process of selling those products to customers. If you anywhere in that value chain, you're touching any component of working capital, be it cash, raw materials, inventory, accounts receivable, accounts payable, you as an employee, you can have an impact on the cash management process in any business.